Joining us right now to get ahead of it is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, great to see you.
You too.
Thanks so much for being here. What are you expecting from the Fed, and how does that sort of dictate how you allocate capital the rest of the year?
Well, I think that ostensibly today is really about regulation, about banks. We're going to talk a little bit later about cryptocurrency or, digital currency. Nobody cares about that. Everyone wants to know about Powell's comments a few weeks ago about when he said it might be years before we start looking for a rate cut. So as an investor, for me, I'm looking at, when he says 2 years, does he really mean 2 years? Does he mean 12 months? I don't think we're going to get any rate hikes before the end of the year. A lot of bond managers are trying to stake a big career move, thinking we're going to cut aggressively before the end of the year. And this is just yet another time the Fed's going to be even more clear with Congress. They're going to be clear with Senate that they're not going to be thinking about any cuts until next year. I want to stay long, not the things that are interest rate sensitive. I want to not be long the big tech. Remember, earlier this year, it was buy big tech on Fed cuts, right?
Yeah, that's what I was just going to say that.
And now now they're AI stocks. Yeah. It's not about the Fed cuts. Now they're AI stocks. And so I understand you get a bounce. I remember this 23 years ago. You get everything goes down 70%, it bounces up, it doubles, and then it starts to resume its slide. And just like 20 years ago, that whole bear market took some time. So we're just starting to see the cracks. And I think the Fed is going to be very clear. I don't know why bond managers and stock investors don't want to listen to what the guy in charge
is actually saying.
Yeah, he's tough.
I mean, Adam, look, jump in here, because isn't this 30% rally in the NASDAQ partly based on the idea that we're going to see the Federal Reserve start cutting because the economy is so weak? And by the way, we are seeing a slowdown. FedEx this morning posted its third straight decline in quarterly sales by 10%. That was yesterday after the close. The shipping company looking to combine its express and ground delivery networks now to help cut expenses. So we're seeing the slowdown through earnings. That stock this morning, as you can see, down 3.25%.
Yeah, well, I mean, it's definitely true that there would be an issue at FedEx because we all bought all the stuff we needed to buy in COVID, right? So it only makes sense that you've now had 3 quarters of declining sales, and they've also got that restructuring that you're talking about. They're trying to put the ground trucks at work with the all the other assets that are used for stuff in the air. So I kind of think of FedEx as its own special little thing. I think the real issue is trying to figure out what's happening with big tech. And yeah, you're right. The AI thing, and I'm along a bunch of these names, and I was one of the guys who actually was buying these things, and now I'm saying I'm sitting on some very large gains. Facebook from 80 to 300. Right?
It's crazy how much Facebook is up. I mean, what do you do with that kind of return at this point?
I had some clients that own some NVIDIA, right?
Yeah.
And you see me wake up one day and you're looking at it and you're like, well, that's very interesting,
Yeah.
So, I mean,
I still own it.
Yeah.
Actually, honestly, I think when I bought it at 175, just 6 months ago, 475 was my base case and 600 was my bull case. I actually think 600 is low because they're doubling their earnings every 18 to 24 months, which means it's trading at 25 times 2025.
So you're not selling that stuff?
No, I'm not selling NVIDIA.
I always, when I see stuff like that, I always like to sell a quarter. Sometimes I like to sell half. NVIDIA's a little, it's only slightly above its all-time highs back in end of 2021. Right. So it's not as if it's gone parabolic in an absolute way, just more recently.
Can we see NVIDIA? What did it close out yesterday? You're saying you
probably I'm going to say 430. Let's see if I'm right. 430, I think, is where it closed.
And you think 600 is now low in terms of
that was my bull case when I wrote the stock up at 175 6 months ago. Yes, and I actually now think that 438. That was close, right?
Yeah, but let's be honest. NVIDIA is really the only actual AI stock, and I think that that's something that we don't talk about enough. It's the only thing that I think adults in rooms will say, okay, they've got the thing. The parabolic move is somewhat deserved. Now, I'm more of a value player. I can argue all day about valuations, right? And that's, great valuations. But I would say that if you're looking into, the S&P 7, as we're now calling it, the only stuff moving up, I will say that you'll look at NVIDIA being at the high end of their historical multiple. And, for reasons that you're into and I may or may not be into, but I will say that you look at something like Amazon, you look at Google, and you look at Facebook. Facebook's not my cup of tea, but Amazon and Google, all three of those, those are still at the lower end of their historical valuation in this market. And so you kind of have to step back and say, hey, is there a little value guy is saying there's some reasonable prices in the S&P 7, and I think that speaks volumes. Now, is that where I want to put my money? Not necessarily. I like beat up stuff. I like the energy. I like, I'm always like, I'd rather pick a little Bank of America, a little Oxy, because I like to play,
getting in on that S&P 7 now, I don't know. It's a risk.
I hear what you guys are saying. Okay, so you're saying big tech could be in general, overvalued. You're all saying that the rates aren't going to come down anytime soon. So as non-finance guy here, I hear this and say, maybe I should just take my money, put it into some treasuries and sit for 2, 3, 6 months, make 5%.
1 year, you're making 5%. Because here's the thing. When I had cash come into my coffers, right? Because I manage money for like old retired nuclear scientists, right? It's the don't screw it up portfolio. When I can get zero on, a little over a year ago, last March, short-term treasuries were at 0.25%. What am I supposed to do? That's very difficult. I was hiding out.
Now it's a different story.
Right.
I can just sit there at 5%. I don't have to pay state tax, which is a nice little thing for people who live on the coast, which I do have clients there. And then I can just sit there, get a risk-free return, and I can play the field all day long. Because, it looked like we already got in small and mid caps a big, sort of a recessionary sell-off since February 2nd down to the little mini crisis. So you can play these core positions and still be into cheaper dividend playing non-NVIDIAs and still, earn a living and make some cash. So I think that as long as these rates are high, why take the risk in long duration? Why bother? You can make money in stocks more than 30-year treasury. Right? And bond trade has been wrong all year. So that's where I'd like to hide out, right? I don't want to hide out into gold.
Well, and the other thing is, you don't have to put all your money into just one thing.
Yeah.
You don't have to own just all tech or all treasuries. I mean, that's why it's called a portfolio.
Right.
You have 30 positions and you spread it around.
All right, we'll leave it there. Lee, good to see you.
Thank you.
Thank you so much.